So we really favor banks when we look at and we read through all the financial reports of these banks. It's very easy to tell by reading the financial reports of these banks that China's banking system is now at probably its most healthy status for the past 15 years. I mean, that is expressed in two ways. First is the NPL ratio, the non-performing loan ratio, is now at one of the lowest points in history. It's usually about 1.5% or 1.3% for a large bank. So that's a very, very low level, you know. When you think that back 22 years ago in 2000, the NPL ratio for banks were about 20 to 25%. So now you can see we only have like 1.2%, 1.5%. It's really low risk. The second is that Chinese banks are having a very low leverage. I mean, if you look at what happened back in 2008, the global financial crisis, the global banking system, especially the US banking system, failed, and the securities companies failed because they had been over leveraged. You know, the leverage for a Euro bank at that time would be like 20 or 30 times, and some of the security brokers got like 200 times leverage. But if you check out the leverage of Chinese banks right now, I think it's about like 12 or 13 times, which is the ratio between the total asset and the book value. It's about 12 to 13 times for most of the China's large banks.